So next up is Meta, and this is a company that is actually had a very good year. So if you look at their share price, it's probably doubled as well. This has had a pretty good year. So here's fourth quarter for you, Stephen. We've got full year as well. So revenue came in at 48.4 billion. That was up 21%. Net income of 20.8 billion. That was up 49%. That's a margin of 43%. 13.6 billion in free cash flow. That's up 15%. That's a 28% margin. If we're looking at segments, Family of Apps revenue was 47.3 billion, up 21%. Family of Apps ad revenue was 46.8 billion, up 21%, so nearly all of it. Family of Apps other revenue was 519 million, up 55%, so that is growing pretty sharpish. Reality Labs revenue, Steve, up 1% to 1.1 billion, just negative 5 billion in EBIT, down 459%, and that's 2,483 basis points lower than the last time we covered it. Full year, Steve, revenue 164.5 billion, up 22%. Net income 62.4 billion, up 60%. That's a margin of 38% on the year. Very, very good. Free cash flow 54.1 billion, up 23%. The guide, Steve, was for 41.8 billion in the first quarter. So that'll be quite a significant drop back of about nearly 7 billion on this quarter, but it'll actually represent 15% year-on-year growth. In terms of CAPEX, they reckon they're going to spend about 65 billion on the year, Steve, which blows out the full free cash flow for the year and another 11 billion on top from last year. That's CAPEX up of 66% year-on-year. Obviously, you know what this is for. This is to support this AI endeavor that they have, and I suppose some of that is in Reality Labs, just to keep that fire burning. The earnings call, Steve, I took the whole transcript and I put it into Gemini and I pressed summarize and it came out with 4 paragraphs and I put, could you just summarize it into bullet points? It summarized into 10 bullet points, Steve, and I read through them and I thought, the people in this podcast are not going to be interested in any of that rubbish. So yeah, I didn't write any of it. What do you think of the numbers though, Steve?
The numbers are very impressive, aren't they? I mean, it doesn't feel like so long ago, but it's long enough ago for us to be definitively wrong about this, that we saw people starting to talk about what they call the law of large numbers, which they're wrong about what the law of large numbers is, by the way. I found that out since. But the rough idea was that, well, these things can't keep growing at these kind of rates. They're just too big. Adding another 10% onto whatever trillion it is now becomes... you have to add on billions and billions at this point, and that's much harder than adding 10% onto even a billion, say. And that's turned out to be, well, one day that'll be true, but look, stop clocks are right twice a day, and it's turned out to be very wrong so far. Those revenue growth numbers are impressive. Those net income numbers are very impressive as well. I'm interested. The Reality Labs thing, I think, is one to live and learn from for me. I got rid of this a little while ago now. Many dollars in terms of share price, let alone market cap, ago, when it was arrived at the point I bought it years and years back when it was somewhere near that bottom of trading at about 11 times earnings. I don't think I quite nailed it, but that was pretty close enough to not make a difference. And I eventually got myself into thinking that, well, look, at this level, I don't really care about the Reality Labs thing, to be honest, as long as it doesn't completely torch everything. Although, and people are yelling at Zuckerberg to stop with Reality Labs too. That'll be okay. And then it got up to a PE multiple of I forget what, where it thought, okay, enough of this, let's let that go in that case, because it's no longer priced for that risk. Bill Nygren, I was listening to, who has owned Meta for quite a while and considers himself to be a value guy, he thinks about this the opposite way round to me, and whether he's right or wrong, his strategy has worked better than mine. I mean, the way he thinks about it is, okay, so you have the Family of Apps side, which generates cash, and the Reality Labs side, which burns it, basically. And he said, well, look, in that case, the way you need to value this is by thinking, I'm going to knock out the Reality Labs stuff because we could shutter that any given day. So actually, this is trading at a lower PE multiple than it looks because we're giving away however much of it is by obliterating it through Reality Labs, which we could stop. I thought of it the other way around, of thinking, I've got this Family of Apps thing, but I'm concerned that Reality Labs might turn into an enormous, endless sinkhole here, and we might end up getting a serious cut into earnings at this point. So I think this looks expensive if you really lean into that. And maybe I haven't kind of entirely changed my mind here, but his approach has worked much better than mine on this. Steve, you've always stayed well out of the way on this one, and I assume you're not interested now, though hard to argue they've not done a very good job over the last few years here.
Yeah, I'm admiring it from afar, Steve. It's a business that I don't really like as an end user, so I am naturally biased against it. But if we were to roll back when we were originally talking about it, I think I've always said that it's doing very well, and we expected it to continue. We just worried where this growth was going to come from, because they had essentially half the world on the platform, and it felt strange to think that that could grow at any great rate, and really they've shown us that that can happen. I've got the geography stats here, Steve, for you, just because why not? But the daily active people is 3.35 billion. That's up 5%. But in terms of revenue per geography, Steve, I mean, this is what you want to see. UCAN revenue was 21.8 billion, up 17%. EU revenue 11.5 billion, up 22%. APAC revenue 9.2 billion, up 23%. Rest of the world revenue 5.9 billion, up 28%. So 17%, 22%, 23%, and 28% growth. Really, really impressive when you're thinking about the areas that they're serving. And most of this they attribute to essentially the AI advertising system that they've implemented is just getting better results, and thus is attracting more people to use it. And I mean, fair play to them.
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.